Welcome back to the program, everyone. Today I want to talk about part 2 of the Bitcoin network and the upcoming event, the halving. I say halving because it's halvening, which I don't think is as accurate. I don't think it's as easy to say. But I think the halving event, that is when the rewards get cut in half. Now, I want you to go up here and watch my previous video to talk about how the miners and the validators all make one network and how it's all decentralized and how the decentralization of the miners and the validators all impact the network. So, and if you have questions on that, please leave a comment on that video or this video. But this video is about the halving event that's coming in April at a certain block number. I don't remember which one it is. I think it's... don't put me on the spot. If you know what block number it is, please put in the comments so we'll know what it is. But it's at a block number, not at a particular time. So the blocks get created by the miners about every 10 minutes based on the difficulty that's assigned by the network, and that can vary because you constantly have miners coming on and coming off the network. So this is where the economics kick in. So now you need to know, to understand how the halving is going to impact the price of Bitcoin, you need to first understand the business of being a Bitcoin miner. Now, a Bitcoin miner has a break-even point, and this is the cost of their equipment, the cost to operate, and basically how many Bitcoin they're going to receive on their forecasted basis. Now, that's all varies, okay? But a Bitcoin operation, a big one, a small one, if you have one miner or if you have 1 million miners, you can calculate all this based on how many guesses you're guessing. That's your hash rate, your miner's hash rate. That is the number of guesses per second that your miner is making compared to the entire supply of guesses, or the entire guess rate, which is measured in terahashes, which is a big number of how, or maybe exahashes. It's really a big number. It's a large number. But you can figure out like how many guesses my miner is making or my miners are making compared to the entire network. Calculate that, and it will tell you about how often you should win a block. And then, based on that, you can know how many Bitcoin you're going to make, both before and after the halving event. So what is definitely true is that right now, costs do vary. Okay, your electricity cost, you can have a contract that just should be fixed for a while based on your local utility. And obviously, you want to get as low of electricity cost as possible. But you also have to spend for miners as well, and you have to get the latest miners. I believe the S19 is the latest miner. I could be incorrect on that. If you know what the number is of the latest miner, please put in the comments down below. And again, please like, share, subscribe. It really helps out the channel, helps us to grow, helps us to give you accurate information. But the key takeaway here is this. At the halving event, the miners' operations, whether you're running one miner or 1 million miners, your income will be cut in half. So that is a big factor in your operation. So there's not many businesses where you know what your income is going to be and whether it's going to be cut in half or not. Now, we know that around middle of April in 2024, the Bitcoin rewards per block will go from 6.25 Bitcoin down to 3 1/8. That's 3.125. So that cuts your income in half. So before, if you're running a Bitcoin operation and it's running and you know how many guesses, how many terahash you have, how often you win a block, you know you can forecast your income. You can forecast your operating expenses. You know how much you pay for electricity. You know how much you pay to cool your units. You know if you're paying for security in your land and your operation for the lease that you have, or your rent, or all your expenses. You know everything. But now your income is going to get cut in half. So because all these numbers are known, there is a break-even point for Bitcoin mining that most operations understand. Now, right now, that's about $20,000. It's going to jump to $40,000 right after the halving event. So Bitcoin, the price of Bitcoin has gone from down in the 15,000 range about 6 to 8 months ago, up to 50,000 now, which is great, which means that everybody is in the green that's running an operation, and they're well into the green because their cost of business is right around $20,000 per miner to be running. Unfortunately, what happens is the halving event, your income gets cut in half, and now your break-even is about $40,000. There's other factors that need to be accounted for as well, which is that in order for your operation to really be competitive, you need to consistently upgrade to the latest miners. Those typically come from China, and you have to pay for those in Bitcoin. So now you're creating sell pressure on Bitcoin's price. A lot of Bitcoin operations right now are going to be taking profits between now and the halving because the price is high and you want to get that price, and you have to buy that new capital and put it online so that you can have it operating and try to improve your number of guesses, your operational efficiency, so that hopefully it's cost less electricity per guess, so you have a more efficient unit. But those units are going to cost some capital, and that capital can only be purchased with Bitcoin, which means you have to spend your Bitcoin. All the miners have to spend Bitcoin and buy them from like Antminer or Antmain, and get those latest miners from China. Those take a while to get. Those take a while to come online. So typically when you see the graphs of hash rate, and they've been consistently going, they've been going up, up, up over time for the last 6, 8, 12 months. But those are typically backward looking. So in other words, the terahashes are going up, but they're based on operations that have been coming online for the past few months. What's going to happen after the halving is that you've got sell pressure before the halving, so as operations have to sell their Bitcoin or take profits and buy new miners and put them online, or they're building new facilities. But regardless, their old miners have to go offline, and they have to put new ones online to improve their efficiency to be competitive. So that's one point of sell pressure for Bitcoin. The other sell pressure comes if the price starts to dip, then miners will be switching off their equipment because they're not profitable anymore. Or they might just run in the negative for a little while, hoping that the price recovers, and then they'll get back in the green again. That's what a lot of miners did before the price was over $20,000 about a year ago. They were just running in the red, assuming the price would go up, and that's what's happening now. So the net operations have improved because now they're making money. So they're making money now, so they can take those profits, they can get their new miners, and they can bring them online. But after the halving event, if that price starts to dip and things start, not just miners but other people start taking profits, and typically you can see that happen. If the price starts to dip below $40,000, now there's immediate pressure on legacy miners, or operations with older miners, like they're not as efficient, or if they have high cost of electricity or other operating costs. There's going to be downward pressure to turn off those older miners or go offline for a while. This is what also happens in legacy mining, such as with gold or silver mining. When the prices are not high enough to support the operation of a facility, they switch off that facility, and then when the price goes up, they'll turn on that operation for mining again. So right now, everyone's in the green or the black, whichever one you want to use, but everyone's in a profitable zone, so they're mining, trying to get as much Bitcoin as possible now before the halving. And there's only so much to be obtained because there's only 6.25 Bitcoin per 10 minutes, which is 900 a day. There's only going to be 450 a day after the halving event. So now the entire network is going to have more pressure on it because now your break-in point has gone from 20,000 up to 40,000. So if that price starts to dip, and because you have to take profits, you have to sell Bitcoin to get those new miners. If you take profits and that price starts to come down in that 40 or below, now you've got a lot of pressure to turn off some older miners or upgrade them, and those cost, or you just switch them off. And then you might see the terahashes or the hash rate of the entire network start to go down because those miners will go offline. Then they got to get the new miners to come online. So you may see a dip in the hash rate for the Bitcoin network, and it'll go back up. But they need to stay above that $40,000 line. So if it dips below 40,000, that's when it'll start to be a lot of pressure on mining operations, which might lead to a little bit of a downward spiral for a little while for the less efficient and the legacy miners that haven't upgraded their equipment yet or gotten the new miners. Because that takes time. It takes time to get those. There's only so many in the marketplace, and they have to get them. Usually they come from China. They have to buy them with Bitcoin. It takes time to bring them online. So the terahash rate you're going to see the hash rate for Bitcoin, that is not a leading indicator at all. That is a backward-looking indicator. So it looks back at because it takes a while to come online. So efforts now to get new miners and get that extra hash rate lined up, that won't be reflected in the hash rate for Bitcoin for several months. So while the hash rate is growing now, you can see a dip coming soon because they have to turn off the old miners, which aren't as efficient. The cost of electricity will be going up. then the price pressure could be going down because some people were taking profits and some people were taking profits to buy those new miners. So these are all the effects that you're going to see in the next 6 months or so, and it'll probably take a little while to balance out. People get ready to that new supply. Most of the operations for miners will be upgraded in the next 6 months or so if they're going to continue, because it's not going to be efficient to run old miners anymore. And then they'll keep going. They'll keep going, and then the price will turn up. So don't be surprised if you see a dip in the price of Bitcoin from 50 to 40, maybe even into the mid 30s, and then it'll start to come back up again in the fourth quarter of 2024 or early of 2025. So just want to give you some idea of like how the network dynamics really impact the price of Bitcoin. So what are your thoughts? Did I explain this well enough? Did you get anything out of this? Please leave a comment down below. Please share this video with other people that want to learn more about Bitcoin and understand the dynamics and how the network and the economy of being a Bitcoin miner really relates to the price. So, and also check out the previous video that explains the difference between running a miner and also running a validator and how those two things are different, but they're very important to the Bitcoin network. So with all that said, I'm going to leave it right there. Please, again, like, share, subscribe. Really helps out the channel. And I'll see you in the next video. Take care.